notorious for not giving much in the way of forward-looking guidance. So on the call, they were happy to talk about how great Q4 was, but not about trends really to start 22. And what we've seen in the data is that advertising spend is slowing year to date, especially on the e-commerce side. Digitally native e-commerce trends look very, very weak. And this is part, Drago mentioned it with PayPal, which is definitely more exposed to digitally native e-com. And I think that's, that is filtering through my space and Google specifically, even though they don't guide, so we don't really know. So you put this all together and you say, all right, well, Q4 was better than expected. The stock was down. People were probably, cautious, rightfully so. And then, the Q4 wasn't as bad. And then you give this 20-for-1 stock split, which I think is actually probably the outsized driver of Google's price performance that we're seeing after hours. Because if you really roll forward the calendar to 22, and look, we're long Google. I think it's the best out of the bunch. But it doesn't mean that they're still not going to slow and that there's not downside risk to estimates, especially for the first half of 22. The issue is that they just didn't guide to that. So I get it in that sense. But really, and I'll stop here in the next 30 seconds. It's really a tale of two trends in my space. If you're digitally native e-com, you're seeing a big slowdown, especially if you're on the advertising side. And if you're brick and mortar or omni-channel, you're seeing continued strength. And so with that said, Facebook getting bid up here on Google is really interesting because they should see much weaker results by comparison for Q4. And also Facebook guides directionally for Q1. So that's going to be really critical here. And then same with Snapchat and especially Pinterest, because I think search, again, took share from social. Social trends tend to lean more heavily to digital, a little bit more native in that sense with respect to e-com, which is where we're seeing the greatest weakness. And we're also seeing agency spend data that we track for Facebook materially underperform that of Google as well. So again, a tale of two trends. I understand why the stock's up, but I don't think it's a sign that everything's awesome. And I think that trends are going to continue to deteriorate here to start 22. And I'll leave it at that.
The first thing you said is the point. It was what we thought it was in Q4. It was quad two. Like the economy was ripping. We're making a call from a macro perspective that the economy is going to slow from there. If you looked at yesterday's ISM number across the board, from the headline number to the new orders component, which actually got smoked, the economy is slowing in the first quarter, and it's going to slow faster in the second quarter. So again, if you can't handle it on the short side, don't be on the short side. If you are going to be on the short side today, enjoy the short side, because Google, this is epic, man. Like I think some people knew that this was going to happen, by the way, because this thing was like, again, marked up into the close for the third day in a row, and that's big news, right? I mean, a lot of retail investors are going to buy Google because the cost per share is lower. It's ridiculous, but it obviously doesn't change anything in terms of the valuation. But what percentage of, quote unquote, investors of the 30 to 50 million new people out there that have never opened a spreadsheet, never mind built a company model, know that? Well, they don't. I mean, that's the point. That's why Google's doing it.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.